Assalamu alaikum everyone. My name is Sajjad Hosain Bappy. I am currently studying at the Department of Finance, University of Rajshahi. For my course, Monetary Policy and Regulations, I am asked to make a video presentation on the monetary policy statement issued by Bangladesh Bank for the first half of fiscal year 2025 to 2026. The period is from July to December 2025. We all know that Bangladesh Bank publishes two monetary policy statements for each fiscal year. So let's dive in the current fiscal year and see what this policy is all about. First, let me show you what I will cover. Here is the flow of my presentation. First, I will give a quick introduction and summary to the current monetary policy. Then I will explain the tools used by Bangladesh Bank. After that, I will compare the previous policy with the current one. And finally, I will share some reform suggestions. So let's start with the main stance of the current monetary policy. Monetary policy is all about managing money supply and interest rate to control inflation and maintain economic stability. The main targets of current monetary policy are keeping inflation below 7% and ensuring GDP growth around 5.5%. The policy stance is contractionary. That means lowering the money supply because Bangladesh Bank wants to control inflation, and then interest rates remain high and the exchange rate is now fully market based, which is a big change. Now to achieve these goals, Bangladesh Bank uses different tools. Let's look at them. In conventional tools are first open market operations, that is buying or selling government securities to control liquidity. Then discount lending, that is giving short-term loans to the commercial banks. And then reserve requirements, that is the minimum reserves banks must keep. In cash form, it is cash reserve ratio or CRR, or in buying liquid assets called statutory liquidity ratio or SLR. But in special situations, Bangladesh Bank also uses some non-conventional tools. These include liquidity provision, that is emergency lending to banks, then asset purchases like buying long-term securities, that is also called quantitative easing, and forward guidance, that is giving signals about future policy to influence expectations. Now let's talk about interest rates, which are very important for monetary policy. Bank uses an interest rate corridor with three parts. The upper limit is standing lending facility. Previously it is called a special repo. And then the middle, that is policy rate. Previously it was called the repo. Then the lower limit is standing deposit facility, which was previously known as reverse repo. Currently, the policy or repo rate is 10% and the upper and lower limits are around 11.5% and 8%. Next, let's see some other tools and then compare the old and new policies. Some other tools are advanced deposit ratio, assured liquidity support or ALS, special liquidity support or SLS, Mudaraba liquidity support or MLS, Islamic Banks Liquidity Facility or IBLF, Emergency Liquidity Assistance or ELA, and Forex Market Intervention. That means buying or selling US dollars. Bangladesh Bank currently buys US dollar in auction from commercial banks. Here is the big changes. First, the exchange rate. It moved from a crawling peg to a fully flexible market-based system. That is for to absorb external shocks and rebuild reserves. Then the policy rates, it remains same as before, but Bangladesh Bank hinted at a possible cut if inflation goes below 7%. Then the GDP growth, it is targeted as 5.5%, which is higher than the last year's only 3.97%. This shows optimism for economic recovery. Private sector credit growth and public sector credit growth both have been increased, and the CRR rate also reduced by 15 basis points. And in banking sectors, some reforms will be implemented soon, like asset quality reviews or AQR will be implemented from the January 2026. Milton Friedman, he is a Nobel economist, has quoted that inflation is always and everywhere a monetary phenomenon. This means controlling money supply is key to controlling inflation. So, what can Bangladesh Bank do better? Here are some recommendations. For inflation target, Bangladesh Bank should adopt a clear framework, and then Bangladesh Bank must develop money and bond markets. Then Bangladesh Bank should promote digital banking and its access for all. Then Bangladesh Bank must do better coordination between monetary and fiscal policy. In short, Bangladesh Bank is using a tight monetary policy with a flexible exchange rate to stabilize the economy. Banking sector reforms are ongoing to improve governance. Going forward, inflation targeting, financial market development, and transparency will be the main focus for sustainable growth. Thank you.